webinar, so feel free to ask questions as we go along. Questions are going to be answered throughout the webinar. Some of the easier ones, I'll tackle some of the harder ones later. And also I'll ask a few questions as we move along. Now, what I want to say to begin with is our disclaimer. I want to state that the AutoChartist service includes chart pattern identification in respect to foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. And you must be aware of such risks and familiarize yourself in regard to such risks and seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The AutoChartist service and its contents should not be construed as a solicitation to invest and or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any results discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, or other information is provided as general market commentary and not as investment advice. AutoChartist, MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use or reliance of the AutoChartist service and its content. All right, that being said, today we're going to cover the topic of managing your capital, managing your risk, and this includes learning learning some of the key elements of applying AutoChartist into trading the markets, and that includes finding setups, looking for your trigger after you get your setup, finding exits, which is very important. We're going to cover Power Stats, which is a powerful tool that AutoChartist has that helps you determine target zones and stop points. Also, we're going to talk about trade management and then have some questions that I'll ask and then answer all of your questions. I also want to tell you that I am battling a bit of a cold here this morning. We went from about 75 to about 40 in Chicago for some reason, and I caught a little bit of a cold. So if you hear the mic muted or if you see your sound level drop off, that's just me sneezing. So I will just give you that warning that if you do see the sound drop off, it's probably because I hit a mute button for a minute. But so far I'm battling through. All right, one thing that we want to talk about today is this process of trading. I'll start out with this slide, and then we'll look at some live data. I'll be working with live data and slides and flipping back and forth throughout the webinar. When you trade, you have this process, and you have to have a process. Otherwise, it's just a coin flip or randomness that you're applying to the marketplace, where you're basically saying that anybody can come in here and sit down and grab a few patterns and just start trading. But if you really want to do this professionally, you have to have a process in place. And when you have this process in place, you're going to have to realize that you need to have a setup, and that's what AutoChartist will provide. It will provide these setups in the form of emerging markets and in completed patterns. And then once you have those patterns or those setups in place, there's a point where you're going to have a trigger. Something's going to have to trigger that signal, that buy signal, that sell signal, or even that stop or an area to take profits. You should have an entry price in mind, an exit price, and then trade management. And when I talk about trade management, I really talk about your management. There's in various areas. Hello?
James? It's Yvette here. I don't know what happened there. We lost you for about 30 seconds. Could you maybe just repeat what you were saying? Or was that a sneeze?
Sure. I saw a sign. Nope, no sneeze. I saw a box pop up. All right.
Okay, thanks.
Sorry about that. What I'll repeat is when you do trade, you need to have a setup. And AutoChartist provides the setups with the chart patterns. As we go through the list, you'll see that you really have hundreds of chances a week to find trades, but you want to fine-tune these down to trades that are going to fit your style and your personal preference and your personality and your bank account. And even dealing with these trades, when you have a trigger or an exit price defined, that's only part of the trade. The key area is this trade management. And oftentimes you'll find traders will blame the system or blame the analyst or blame the market, something to place blame on, when it really comes down to trade management. And that's knowing how much money you have to trade and how it fits into the particular signal that you're getting. So what AutoChartist will do, its part by delivering the pattern setups, and then the rest is up to the volatility of the market to take you in to that position that's being suggested. And then after that, you should have, again, proper money management. That sets the use of stops, position sizing, and trading within your means. You never should just come out and say, well, that's a great pattern, I like the way it looks, I'll just throw everything I have into it. No, you have to have some kind of systematic rules. And the other thing that we talk about today is when you make a decision, that you got to make the decision on where the market is right now. What are the conditions now that are driving the market, as opposed to what can happen later, or where do you think it can go? It's kind of like eating with your eyes. You know, you can see something there and say, boy, that really looks good, and then you figure out later you can't finish the whole meal. And that's what happens with trading a lot of times, is you see a pattern that looks aesthetically perfect, that you think you can deal with, and maybe one element will be missing later. Maybe volatility will not be there, or momentum will not be there. And because of the fact that you maybe put up too big of a position on to handle the market, you know, you run into problems later. So we're going to try to talk about all these different ways that you should, try to avoid some of the problems that come up that can cost you. Now we're going to flip to some of the live action right now, and I'll leave this chart up here as I talk. When you're dealing with the setup or the first part of trading, you want to find important activity that's going on, and you want to pinpoint that activity. And you can do that by using various filters that AutoChartist has set up here. So for example, we're looking right now at a filtered screen here, and I'm pointing at I call it the 1 FX Majors. It's all intraday, and it's non-trending. And what those refer to is, when I hit this edit button, is that I've selected a group called FX Majors. So I can come down here and you can see that I have a whole group to select from. So after I select FX Majors, I want to go down to my search criteria, and I select various filters. I'm right now in this particular one leaving most of these filters down to 0, so I want to get the maximum out of the trade. I want to see what's going on in the market early in the day, and so I want to make sure that I get a lot of examples as I begin my trading day. I want to see if there's a theme developing or some kind of a tone in the marketplace. And what I mean by that is, if you start to see some of the dollar rate currencies, if you start to see that the dollar's strong, and that gives you an idea that perhaps risk is being taken off, that traders aren't going to be looking at risk today. If you remember, some of the tones we've had in the markets recently is when the dollar's been strong, equities have been down, things like that, or traders have been seeking shelter. So what I try to do is set it at the maximum in the beginning, and I try to figure out and see if there's a theme developing. For this one, I'm looking at non-trending markets, and those, if you've been to previous webinars, you know that my non-trending category are basically the triangle formations. You can see I've checked on the ascending triangle, descending triangle, and a symmetrical triangle. Okay, I've also selected a pennant formation. Those are my traditional non-trending patterns. You can also see here that there's this orange button that's popped up, this dot that's popped up, and that's telling me I'm getting fresh signals. So the one I'm looking at right now is the U.S. Japanese yen. Okay, you can see that this is almost a perfectly drawn triangle. And so what I want to observe when I'm putting it all together and looking for my setups is I usually start with emerging patterns. And in the emerging pattern section here, you can see that I have this same 15-minute triangle for the U.S. Japanese yen. So at this point here, I'll blow this up a little bit so you can see. Should go here in a minute. Well, it doesn't look like it's cooperating this morning. Maybe it'll pop up in a second. There it goes. You can see that I have these red and green candlesticks throughout this formation. And then when the market breaks out, I get these white candlesticks. Inside this triangle here, before it breaks out, this is called an emerging pattern. So when I see an emerging pattern come up, especially triangles, I love triangle patterns, and I'll tell you in a minute why. But in a triangle pattern, you're going to see that you have this broad range in the beginning, and then it starts to narrow down. Okay, this is why they call it a sideways pattern, because typically inside here, you start to get this sideways action as the support and resistance narrow down and compress. That's the key characteristic of a triangle pattern. So in this case, as this market begins to compress, it's pretty much telegraphing when this market can break out. You don't know exactly where yet, but you can tell that based on this compression here that something's going to happen in here. And that's what the emerging patterns do. It gives me this setup. It gives me an idea of the price range that traders, that the market has been trading in. Okay, it shows me where these old tops are. Okay, it shows me that there's sideways action. Then it shows me here where this trend begins to change. Okay, so I need to know ahead of time, and that's why I look at these emerging patterns and I see what's going on. And I tend to focus on, like I said, the non-trending patterns, because they are telegraphing or almost pinpointing where AutoChartist thinks this market can move to and where it can break out. So after I get I look at my emerging patterns, I will go back to my completed patterns. After this begins to break out, it becomes a completed pattern, and then I get more parameters. Okay, I'm trying to close this out here, and it doesn't seem to be cooperating. There it goes. Okay, now after I get this emerging pattern on my radar and I'm watching it, okay, I then move to, I see here where it's completed the pattern. You can see here it was 123 bars to form that emerging pattern, and here on the 194th bar it broke out to the upside. So once I get my parameters down on my emerging patterns and I start to see this market break out, okay, this is telling me that once I get this set up and break out, AutoChartist will give me this gray box here that's going to tell me where this market can go to. You can see by numbers here, it's 77.21 to 77.54. Okay, so that's what I really looked at these two patterns about. I look for emerging, and then if I see something developing, I go to once it becomes completed, I realize that I can flip to this completed pattern section, and I can get a idea or a forecast of where the market can go. Okay, now going back to this pattern here, when I'm in the stage of this market becoming a emerging pattern, I can look at where this area is or where it can break out. So that's part of my analysis, is that I can look at what's going on here right around this part as it becomes as it is an emerging pattern. So what I'm looking for is what's going to trigger this breakout. So ahead of time, I'm looking at the 76, 96 to 77 area as a possibility of a breakout. Okay, so that's what I want to do, is I want to look at where this market can go or where it can break out. And that's why I look at emerging patterns. Now going back to the completed pattern section, is that's my trigger point. My trigger point is going to be this breakout over the green line. If I don't see it in the emerging pattern section first, then I'm going to have to go back to this completed pattern, and